There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Okay, welcome out to the Coaches Show here, presented by TackleTrading.com. This is Coach T from Tackle Trading, and it looks like we got Coach Gino as well, and our producer Phil. Phil, it's always good to have you come in and organize and host these events. I appreciate that very much. All right, let's jump right into it. Gino, you want to drive? You want me to drive, bud? Let's talk about the industries. Let's talk about the market in general. Let's go through the economic calendar, and let's go through some of the data points that I think are really important right now. First off, Gino, how are you doing tonight? Gino's on mute. That's okay. And there's Noah, my main man, Coach Noah, coming in here as well. And let's start with, I'll just bring up my screen right now.
Quick audio check, you hear me okay?
Hey, how you doing, Noah?
Super fantastic, awesome.
Very good. Very good. Okay, let me know if you guys can see that. And let's light up a few things here. Let's start with the Trade Center at Tackle Trading. You know, one thing, guys, that I think is very, very important is to learn to use some of the basic tools to keep you organized, informed, aware of what's happening. And let's start with the news. News button. News is one of the very first things that I'm going to look at on a daily basis when I'm going through the markets. Let's go through a few headlines here today. Dow up 390, NASDAQ up 128, S&P up 48 points. Lighter than average volume. The volume was down about 10% today. Noah, how do you interpret the first just basic reaction to such a big day up in the markets?
Well, if you take a quick look at the chart, you want to kind of get a look at the overall view of that. And, you know, for me, as far as like the charts go, strong move up, a little bit of, gave a little bit of a back early in the morning, and then volume-wise, overall, let's see if we can grab a chart of that so I can give you a direct correlation.
There you go.
Okay, so pretty good solid day up, typical volume, just slightly above average, closed near the highs, and as I watched the market early this morning, it didn't really move a lot on the initial open, kind of dropped back a little bit and then rallied pretty strong into the close. So, it's still kind of in a consolidation pattern overall. And, if you go look at my stock report, I kind of put a bearish twist on everything, and this could certainly alter that outcome. We talked about it as being in a consolidation pattern, which bear pennant was kind of what I spotted it as, and it can go either way. I thought it was going to be more likely to break down based off of the overall setup and pressure and seasonality part of it. This time of year we typically see things to the downside. But if you kind of scroll down and look at the patterns I drew, you'll see bearish pennants, and we're still inside those pennants, but it's going to be pressuring that top. So it'll be really interesting to see if on this short week, with limited news and information coming out, if it can break up to the top side, and then we've got a couple bullish candidates in there versus a couple,
Interesting. Love it, by the way. First of all, yeah, I've got the sectors right here. We've got the patterns right here. Maybe a little slow on the video coming through, trying to run everything, but got the bear watch, current bear watch. You've got a bunch of the ETFs in here, the XLYs,
somebody's frozen.
I's, E's, and so on
and
so forth. Those sectors.
Can you guys still hear me okay?
Spiders. Yeah, it may be.
Yeah. You see that now? Now was I
probably on my end? It was probably
timed out, or did Tim time out? So if you look at kind of the S&P, the overall, I hear you okay. Okay, so kind of a still bearish pennant pattern, and consolidation on a pennant is a symmetrical triangle. They can break either way, and I think it's the market's, I don't know, I think the market will be waiting to see what the Feds do overall next week. And, even with today's upward action, it stayed inside that consolidation. So I wouldn't be surprised if it gave it right back tomorrow. But I got some nice bullish picks out there, which were hard to come by, technically speaking. I'm going to, some pretty good bearish picks and a handful of neutral picks so you can make money either way. with the volatility index high, it'd probably be best to be selling options. And if you look at this week's stock report, I kind of went in and showed the overall patterns on each one of the sectors. And if you go study the seasonality part of it, you can kind of see which way they tend to go overall. If you kind of look at those, if you hit that, yeah. So across the board, I mean, patterns overall, in my technical estimation, are bearish. So today's upward movement in price is kind of bold, and I don't know if the bulls are really into it. I mean, it's going to be one of those things where is the consumer confidence there? And me personally, really kind of hesitant to jump into really strong bullish trades. There's a lot of things are on sale, but I want to see what the Feds are doing before I really go in on any significant position sizes. The only thing I'm really looking at right now with the higher implied volatility is building positions in oil, and those looking at the potential lowest price we've seen on that in 20 some odd years on like the USO and the crude light. So I think there's an opportunity there because there tends to be a recovery if this is a correction in the market, and we do see a strong fourth quarter that usually starts mid to late October.
By the way, love the stock report. Very, very good addition to the pro membership and our pro team here. No, I love it lately. I hope that everybody out there is using the stock report to help them identify sectors, areas, patterns, information in the market that you can take and you can take action on. I really like it. One question I have for you, Noah, as a technician, when you see the same pattern popping up sector over sector over sector, industry over industry, how do you interpret that? Is that just because everything's moving as a market at whole? I mean, what's your read from that?
The old myth of diversification in the stock market, in my opinion, doesn't really work. One of my acquaintances, and one of people I've actually learned from in the past, is a gentleman from Chicago Board Exchange. He runs a firm. He's in a firm called PTI Securities. He was talking to me a couple of years back about how they track all stocks, and he was talking about the correlation rates. And he says correlation on all stocks across the New York Stock Exchange and the NASDAQ exchange are over 80 some odd percent. He was saying 80-85% correlated, meaning that they all end up looking alike, particularly when you look at the sectors. And so what that kind of means to me is you go pick out almost any stock out there, and they're going to have a similar pattern. If you look at across the major indices, and I have kind of a major, the energy sector, you've got the energy sectors in a slightly different pattern, commodities are in a slightly different pattern, but across the board, they were all in a consolidation with the exception of one or two sectors. And I think one of the more powerful pieces of information inside the stock report is just that stagnant chart of the seasonality, the 20-year average seasonality up at the very top. And have you ever used the seasonality tool inside of Thinkorswim? It's a pretty cool little toolbox.
I have not. Where's that?
This is one of more. So you go to don't go to the regular chart. So just go to the regular chart, and this is one of my favorite functions. You go to the style button. Go click on style, and then you go to chart type or chart settings, or chart mode is what it says, chart mode. Go back to the previous menu, style, chart mode, seasonality, and then you go change your history. Go to your history, go up to the style button again, go down to, and go pick 20 years. And you get 20 years of history on any stock or index you want, and I change it to 20 years weekly or 20 years daily if you want to get really detailed information. And what it gives you is the top blue line is the current market, and then the red line down below is the history. Now, you'll see discrepancies because current market prices are way higher than they've been over the 20-year average. And to get in there and really focus on it, what you need to do is go up to the top right and change it to a manual where you can zoom in on just the seasonality part of it. And if you go, we can put in let's go back to the S&P index real quick. And then go hit the top right corner, that little button that changes between manual and auto on the scaling. Little button just left that.
This one here.
Right there. Boom. Yep. Change it to manual, and then you can just go down the bottom and highlight the bottom part of the chart. So you go down to the red zone, start at the top of it, and highlight by doing, yep, there you go. Boom. Now you go ahead and zoom in on it, and now you can see the seasonal movement, and you can kind of look down, you're looking at it over months or weeks or whatever you're looking at. You can see what it's doing on average And so you can do that by sector, you can do that by stock, you can do it by the market, and it gives you a really strong idea of how stocks perform personality-wise seasonally. And you'll typically see September, October down, where there's been 3 major market crashes that have occurred in September, October, and that kind of weighs those averages down. But it's kind of a cool concept to look in and say the best time for trending markets bullishly is the first quarter, between January and about May, and then it's sideways for the summer, and then it's up again for October through December. That's when the market really trends. Otherwise, you tend to see it sideways, and you see bigger corrections in September. So it's kind of a cool thing conceptually to understand seasonally. And so you can do this on any stock, and you got to take it with a grain of salt because it's using data and averages, and it's based off of just statistics. But it's helpful information, in my opinion, to kind of get an idea of how institutions treat any particular stock.
Well, what's interesting, you were mentioning crude oil there for a bit, and now here is the crude oil chart with seasonality, and we're going to get into commodities here in just a minute. But fascinating, the volatility, first of all, just the nature of the volatility, and you can see that even performance-wise, the driving months, March, April, May, June, into the summer, they peak off at July, and really the back end of the year is generally not very good. Now this is an interesting year because of where we're at. Love the tool, love the tip here, Noah. We're going to have to dig into that some more at some point. I love it. Let's not go too far past some of the key content we need to do. One thing that you had mentioned is you had a few picks in here. You had ULTA, Visa, Fold. Why don't we randomly pick one of these, and let's talk about Visa. Okay. And let's bring up
and I picked these. When I went and looked at which stocks, now you got to go back and switch your chart mode to regular, standard chart mode. So go back to style and change your chart mode back. I tell you what, learning how to use all the tools inside of Thinkorswim is you need a PhD in general. So
that's right. So we're going to do standard right here.
There we are. So I picked Visa and Ulta and the others fundamentally. And based off of the fact that they went into consolidations, they're still above the 200-period moving averages and in significant support zones. They have strength. They pay dividends. They've got upside potential. They still need confirmation, so they're still just like the market in that general kind of triangle pattern. But because they have fundamental strength, and because they have they are stocks that pay dividends or have nice scenarios. They're in kind of bullish. They're bullish, defendable, and so you can pick them up, but you need to see them break out of those triangles. For me, confirmation on those triangles has to either violate the trend line or take out a resistance peak, and so it's kind of close there. But we need to see. And I put in the triggers. You'll notice the triggers I put in required the stocks to break the resistance points. So you'll see that I put in
71.25. Yep, I like it.
Yep, and it's a little bit higher than it is right now, so you can see that needs to go up. And so we got the I like the Ulta chart quite a bit. I was pretty fond of that stock. It's been one of my best stocks. My daughter picked it for me earlier this year. She's 13 and she likes makeup now, and apparently they have a good brand she likes. So she picked it, and it's got good fundamentals. It's one of the IBD stocks on the list. It's been here you got a little bit more of a W pattern, so that one's triggered. And so we're into that, and you can trade a stock. The implied volatility is high right now, so if you're looking at options, you're going to be paying a bit of a premium. Spreads you can usually trade still because they come out in the wash. Stock is you don't have to worry about volatility. One of my favorite things is covered calls when the volatility is high, because you can buy the stock, and then you can get extra fat premiums, and you can use the options for things like protective call rights.
Yeah,
kind of a fun concept. So even in a bear market, finding or what I kind of perceived as a bearish overtone, finding the bullish candidates, technically speaking, was challenging because most of the chart patterns felt very, very similar to just bear pennants. Big strong move down, consolidation inside. I won't be surprised if it gives it way to the downside, but I think it's going to be a little bit of wait and see. May continue to consolidate. We'll have to watch it. See if it breaks out, we go with it. But to see what the Feds are doing next week.
And I notice ExxonMobil on here on the bear picks, energy has definitely lagged. One thing that you can do, guys, once you learn sector rotation, you learn how to pick the sectors out as well, you follow the stock report, you can start to identify areas that are better for bullish and better for bearish. Exxon, definitely a bearish trend here, Noah. Where was the trigger on this one? I believe we would have it.
Down below candlestick low, so it still needs to drop for us. I put it down at down below the previous candlestick lows right there. So got a trigger in, and trail stops would be acceptable. I put in stop losses above resistance points and over an ATR away. But if you wanted to use trailing stop losses with that, you certainly could. How far away to put a trailing stop is always I don't know, with stop losses, it's always what I refer to as baby bear stop losses. Not too tight, not too loose, but just right. And that's elusive. It's always challenging, as any technician knows. And in my opinion, depending on how short term you are, if you're putting stop losses within less than an ATR, probability of getting hit goes up. If you get it 1.5, 1.2, even 2 ATRs away, you're certainly going to have a better probability. But then the further away you put the stop loss, the kind of the longer term your swing trade posture tends to be. So if you use trailings, you can kind of mitigate that, because if you get confirmation, it'll start to move you towards break even with any directional confirmation you get.
Here's a coaching tip for everybody out there from myself. If you ever have to tell one of your coaches or mentors that your day or swing trade turned into an investment just because you simply didn't have a stop loss, then you know you made a mistake.
If you went from a swing trader to an investor, you mean you're on the wrong side of the trade.
That's right. That's right. Okay, love it, Noah. Very, very good stuff. I do want to transition into currency a little bit here, and part of what we'll do there is we're going to start with one of my favorite locations in all of Tackle Trading's website, and it's if you go to the Futures tab, guys, and then if you look at over here on the right, you'll find where it says Currencies. Okay, and then we can take a look at every major currency on a daily chart. Noah, while I've got you, let's just give me your first instinctive, reactive, technical read.
Well, one of the first things I look at when I'm seeing currencies, I actually do make sure to include that in the overall stock report so you can see what the U.S. dollar is doing. I'd say overall, dollar strengthening, but it's kind of a kiss goodbye setup. Euro is, and I know that the policy between a euro dollar should be dollar up, euro down, but it looks kind of bullish. So, current scenarios, I think it's going to be a lot kind of wait and see until the Fed comes. Overall, though, I'm seeing some pretty strong bearish trends on the Canadian dollar. British pound looks like it's got a bit of a bear retracement recovery. Australian and New Zealand dollars are downward trending, so you can kind of keep trading with the trends. And I think it's so vitally important to understand your currency, and when you look at something like the dollar index or like the UUP exchange traded fund, they're tracking the dollar. These futures, they track the dollar or the euro or the Japanese yen against the other 5 or 6 currencies. Gives you kind of a good average of how they're performing, and understanding how that affects the market in general is so vitally important. So there's the dollar. You can kind of see the kiss goodbye setup, possible double top, and it'll be interesting to, the news you have to watch out for is the Feds with their little interest rate policy statement next week on Thursday. But in between now and then, it's consolidating, and so the market's in consolidation. Your currency is in consolidation. Push will come to shove at some point in time. Consolidation invariably leads to breakout. The question then becomes which way.
Yeah, and fundamentally, it's really hard to pinpoint that down right now because, like you're saying, if you just read the news headlines and thought logic would prevail in 2015, the euro would be lower, the dollar would be higher against each other. And those are the two major reserve currencies in our currency system, in what we call fiat currency. And so and that just hasn't played itself out. And what we're looking at here is a consolidation with some pressure to the downside. I think that you see a pretty tight range developing. If you're a short-term trader, I'm sure that you've identified your support and resistance triggers. Very, very important. Let's go through a couple of the major cross pairs against the dollar. One watch list that I recommend that everybody, if you trade currencies, everybody should keep track of the US dollar cross pairs. And I've developed a watch list with every major currency against the dollar to do just that. Let's start with the euro dollar. And let's take a look at that chart. Trigger pretty much right there, isn't it, Noah? That pivot point from about 8 bars ago, or 6 bars, whatever that is.
Well, you got continuation up until that point if you want to ride the current little new scenario, but you're in this kind of support resistance neighborhood. As is, it's one of the things I've been trying to wrap my head around, and Tim, and maybe you can shed some insight into this, is we've got a stated goal to bring the dollar and the euro to parity, which means that would go down to $1 even, so the euro would drop down to the same value as the dollar. Now, if that's their stated goal, in the meantime, the supply and the demand and ebb and flow of the currencies is going to drive it whichever way the wind blows. But right now, I can see it forming head and shoulders, or I could see kind of support resistance to the upside. If it breaks a resistance pivot, you go bullish. You can kind of look at it as you can even take a real simple trading strategy, Tim, is what I would call candle takeout or momentum trade. If it trades above the most recent candlestick, you trade that direction. So I would take the daily time frame, and I would drop it down into like 30 minutes, and I would buy above resistance on 30-minute time frame. So if it broke,
good trigger on that too. Yeah, right here. I mean, boom.
And there's room for it to run up to the next big resistance zone, and it's just a momentum trade. Because what happens is if resistance or support fails, it forces traders to cover, or hits triggers or stops, or hits buy orders, and there's a seeming almost a chain reaction. If you want to go back and look at when momentum really picks up on anything that you trade, stocks or currencies or futures, doesn't matter. Go identify when support or resistance breaks. That's when you see really short-term, strong momentum increases. And it's the real simple thing: buy above resistance and short below support. And you can do it on any time frame because it works on any time frame. And if you go use an indicator like a MACD that measures momentum, when it breaks resistance or support, that's when the momentum really kicks in. You'll see the MACD diverge, or you see the real strong indication that it's running. And it is because it creates reactions in traders when key thresholds break.
Yeah, I love it. Love it. Guys, simple tools. You don't have to make this stuff complicated. If you learn how to do just the basic things really, really well, you're going to build a lot of confidence. And that's exactly what I would recommend as well. Love it. Love it. Very good stuff. A couple other charts I do want to talk about, because the euro dollar is the biggest cross pair in the world, in my opinion, but then you've got a couple of close seconds. Let's go to the dollar yen pair for a minute. We won't look at every currency pair, but we're going to look at a few of them. And I will get to you had a good question a minute ago. I do want to talk about that. Let's talk technicals here. What do you see with the dollar yen?
Dollar yen, same consolidation pattern. You've got an inside consolidation, higher lows, lower highs. It's pinching in. It'll break one way or the other. When you get those kinds of consolidations, it's not a matter of if it breaks out. It's a matter of when and what direction. And you can use the backside of the triangle to estimate targets. So you could draw, with the symmetrical triangle, what you can do is go draw trend lines on the bottom, trend lines on the top, and then draw equal trend lines on the bottom and top, and then you can go take the trend line from the bottom and go stick it on the top, and it'll give you a symmetrical target. Meaning, there's just different ways to approach. Yeah, you could use a channel on it, where you could just draw the channels on, or you could use, where you can kind of do it either way, and it'll give you symmetrical targets, channeling targets. The math and the symmetry works really, really well. It's same with things like cups and handles and symmetrical triangles. The back side of a symmetrical triangle, the back side of an ascending triangle, the size of the cup is oftentimes how big it breaks when it runs. So if you look at the back side of that little triangle, you count how many points it is, that's how far you'd use as a target.
And the one thing that's very fascinating about the currency markets lately is the seemingly disconnected market in one way. You're seeing weakness in the dollar against major currencies like the euro in general, but then you're seeing the dollar hold up a lot better against the Canadian dollar. And there's a concept we call commodity-backed currencies, or commodity currencies in general. You'll hear that phrase. Some currencies, because of the nature of their economy, Canada, Australia, New Zealand, they're more sensitive to commodity markets, and quite frankly, the commodity markets have not been great, and so you're still seeing weakness in some of these currencies. You had a great question, Noah. I want to bring Gino in on this conversation as well about why in the world is the dollar not performing better, and if the stated policy from the European Central Bank, which it is, it's out there, it's public, is that they want the euro to trade at parity with the dollar. Why isn't the dollar rallying, and why isn't the euro selling off? Gino, what's your take on this? Is there a carry trade scenario here? Is it just people are holding on to the euro? I've got a perspective, but I want to get your take on this one, Gino.
I've heard a few things, Tim. I was going to ask Matt what his take was on it, because he was talking about this last week. And I still think the dollar will go to parity, because they have the quantitative easing thing going on in Europe, and they're going to announce more. And they hinted towards that last week with Draghi. And I don't know. I'm still trying to figure out why gold and silver aren't taking off, Tim, with the global meltdown. That should be the thing. Because, gold and silver is usually a global meltdown, but also it's because of inflation worries. They'll jump into gold and silver. So if gold and silver is not going up, that means there's no inflation worries. If the global economy is really breaking down, gold and silver should be going up. So I was more worried about that. So I think it's all about, like Noah said earlier, they're waiting to see what our Feds do next week. By the way, you guys, next week is also option expiration on the 18th. The Fed meeting's on the 17th, which is kind of odd because it's usually Tuesday or Wednesday, but it's going to be Thursday. The FOMC meeting will create a lot of volume, whether they raise interest rates or lower. But then option expiration will really create a lot of volume because it's the third quarter. You get a lot of volume on the quarterly expirations. So back-to-back 2 days of a lot of volume. And then, a little side note, Thinkorswim raises margin rates on how much they hold on naked puts and naked calls on Saturday. So when you wake up Monday, all your margins will be higher if you have naked puts and naked calls, which is most people in the index trading. So you're going to see a lot of people dumping. It's going to be a wild week next weekend, but I think everybody's waiting for, like Noah said, they're waiting to see what our Fed does with our interest rates, our outlook on our economy. There is carry trades out there, Tim. You can go into what a carry trade is if you want. It's kind of advanced. A lot of the big money does it. A lot of the big corporations do it. But
it's
I don't know.
Really for a coach's show. That'd be more for like a mentorship. Yeah.
Yeah, and it's kind of boring to tell you the truth. It really is. I mean, if I can't do it, it's boring. Another thing, Jim, is the markets are we're following the dollar. So, like Noah had made a big point there that we're coming to kiss of death territory with the U.S. dollar. I don't know why it would be going down so much if it's going parity to the euro. I think we just, I don't know, something's going on out there. And hang on a second. And we're trying to define a range in our market. And I think it'll all shake out when we get some more direction from the Fed. It's all about uncertainty. And we're only, 9 days away from that report, 8 days away from the report. So we'll get that out of the way. And then the market will shake out the following week and we'll have more direction. And I think you'll start to see things like the euro heading to parity. You'll start seeing things like commodities going up and all that stuff. I think we're just doing a lot of shakeout and repositioning for the third quarter. That's just my take on it because I can't really nail down exactly one thing.
Yep. Not all days are created equal, guys. Obviously, today in the market, we had a big up rally in stock prices. But one thing that you always need to do, you've heard Noah talk about it, you've heard Gino talk about it, you've heard Matt talk about it in the Forex reports, and I'm going to talk about it right now. Write down the date, September 17th, circle it on your calendar. If you're a new trader, you need to watch the market that day without fail, okay? I know that every day is exciting and it always pulls us in, but this is an event where the Federal Reserve is going to come out and make a decision on interest rate policy going into the fourth quarter. There's been a lot of rattling around with it. There's been a lot of opinion thrown out there. The reality is there's an old saying in trading. I want you to type this in the chat. Trade what I see. Trade what you see, okay? Not what you think, not what you feel, not your politics, not your worldview. Trade what you see. If we see the market taking off one direction or the other, you have to respect that, okay? The kiss goodbye pattern here on USD, it's a fascinating one. You still need some volatility to come in for confirmation. More in the Forex report, I'm sure. And I want to take a transition here, and I want to talk about, actually, we're going to start with gold. We usually start with oil. But, Gino, you had mentioned gold, and Paul had a good question in the commodity corner. He said, is gold forming a head and shoulders? When I first read that, Gino, I thought it said, is God forming a head and shoulders? And my religious upbringing started kicking in. I'm like, I wonder, buy wheat. But, actually is gold forming a head and shoulders. Tell me what you see in the chat here, or in the chart here, and let's start there.
Is that for me, Tim?
Yep.
Yeah, it's an awkward head and shoulder. I mean, if you call that that right shoulder there's a little higher. But it's possible. It's possible, again, depending on the way the Feds go next week. And yeah, the way you can trade is /GC is the futures. A lot of people will trade GLD, which is the ETF for it. So if you guys want to trade gold, it's GLD. It's a possible head and shoulders. It's not a big range-bound one. If I had to choose, slightly bearish here. It's kind of sideways. And I like to compare it to silver. And one more thing I'll compare it to. The next thing is silver, SLV. And you'll notice they usually look similar. And that one doesn't look as bullish, right? And then I look at the people in the business, XME, the sectors XME, X-ray, Mike, Echo. The miners, neutral. A student and I were looking at that today. It's like neutral. It doesn't know which way to go. I cannot get a clear trend on it. Therefore, I can't make a clear decision. So, to me, not bad for like credit spreads, iron condors, that kind of thing. But again, silver SLV is real cheap. Great covered call play. But I'd be doing at-the-money calls to protect myself. And Tim and I talk about this all the time. We're big silver bugs. Tim likes the physical. He likes to buy the physical silver because you like to wear it. You like to wear it out, right, Tim? You like to wear it out on dinner dates.
That's right. Well, I walked into a coin shop last week, and the markup between what the spot price is, where they pull it out of the mine, and what they're actually selling it in some of these coin shops is incredibly expensive, Gino. And that's why you got to get a good, reputable dealer that you can buy from if you're ever going to buy physical. I know that we've had some history with Zaner. You can do it online if you get a good broker, that kind of thing. So something to think about. And I would definitely rock a gold chain, Solon. I'd have no problem with that. It's a simple question, guys, and I'm going to throw it around the room here one time. Everybody gets one answer. Why in the world is gold not rallying on the back of Chinese weakness and all these international storylines that are showing all the fear and the problems in the marketplace? Usually it's a safety net. It is a place to go. Noah, let's start with you. What do you think?
Is there a correct answer, or is there no? I think it's because of margin calls. I think like when the market got a little crazy, you got a lot of people who got hit with margin calls, and it forced them to liquidate physical in order to cover margin. That's my general thought.
Mm-hmm. Gino?
Yeah, that's a possibility. Also, I read that there are some countries that are in trouble actually selling it off to pay for their debt, dumping their gold as, insurance. So that's another. Yeah. There's a lot.
Yeah, China dumped a lot of gold the last 2-3 weeks because they kind of had to. But it's also, you're going to hear this storyline, and I'm not sure if I buy the logic behind it, is that the reason why people aren't going into gold is because they're going into interest-bearing payments with the assumption that the rates will go up. And they're saying that there's some kind of competition there between gold as a safety net or bonds as a safety net. I don't know if I buy that. It makes me feel, honestly, that maybe gold is changing a little bit. Maybe there's international pressure just from some of these countries selling. It's a reflection of weak global demand, though, is really what it comes down to. And you have to respect it. Crude light. Let's talk about my favorite thing to talk about, which is crude oil. Nothing better than crude oil, boys. I'll tell you, it's one of my favorite charts, favorite topics. Give me a conversation about crude any day of the week. Let's start with you, Gino. What do you think here, my friend? What are you seeing in the crude markets?
Well, they're definitely volatile, and I'll tell you what I've been doing, because the insiders I talk to, they're telling me to buy oil, USO, and selling at the money calls. That's what they're doing. Now, why are they selling at the money? Because it covers your downside. It brings in a lot of premium. You're buying like USO, which is dirt cheap. And if you don't want to buy it, you can sell puts on it. And their reasoning is this: at the money or even in the money calls is to protect the downside. They want to own it here. And they actually want their calls to expire worthless, which means they want it to go down out of the money and let those calls expire worthless so they can use that cash. Because when you sell a call, the cash goes in your account. You're allowed to sell a call because you own oil. If oil prices go down, yeah, your value of your investment goes down, but you still got the call premium that's cash to help you buy more of it. Historically, we're at low prices, and we're getting nailed here in California because I think we're, just out of curiosity, let's all type in what you're paying per gallon. Let me type it in. I'm paying $3.55 right now in California. Okay, what are you guys paying?
California. Whoa.
$1.99. Who's paying $1.99? You gotta be kidding me. $1.99? Is that a lie? $1.89. Now, 80 cents of it per gallon is tax. But still, how is there such a big difference in California? Okay, Chicago, there you go. All the blue states are paying way too much. Go figure that out. So, Seattle's what, $2.90? Oh my God. You know, it's really... Yeah, Jan Watt said Jerry Brown. That's a color of my lawn, Jerry Brown, because we have a water drought here.
Yeah.
We can't water our lawn, so we call it, hey, look at the color of my lawn. It's Jerry Brown. Costco's $1.94. Republic of Illinois is $2.90. Oh, my goodness. Okay, so yeah, I can't understand. So really what I'm doing, if I could, is the pairs trade. Long oil, short gas, which is actually, you can do it, because they should come together. If you could short California gas and go long the oil, it would be a great trade. So, you know, it's somebody's making some money out there, and I think the oil companies are going to show us their profits here in the next earnings season. So, yeah, they're buying. The insiders that own oil, they have money. And I don't know. I'm just a big covered call fan of USO. It's a long-term holding. That's what I do in my daughter's account. And in her lifetime, hopefully it'll double and triple. And when I do covered calls against my holdings like gold, silver, or oil, let's say I have 1,000 shares, I don't sell 10 calls. I only sell 8. I never cap an upside trade like that. I never cap a commodity. Because I think, Tim, and this is just me personally, it's not advice, I think we're going to see inflation in the commodities. Which brings me back to this gold thing and oil and silver. If it's not going up, those commodities are not going up, that means there's no fear of inflation. Why would we raise interest rates? You know, I can see a quarter point just to see if the economy can handle it. But I thought the reason for raising interest rates was because to control inflation. But if it hasn't even started yet, what are we controlling? We're going to send the commodities back into deflation. So I don't know. It just doesn't make sense to me.
Well, what it is, Gino, is the Federal Reserve wants to funnel money back into their bankers, buddies, friends, pockets. And so raising interest rates allows money to come back into the banking system. I'm sure a lot of these big major banks, they don't like the idea of lending money out at 3 or 4% on a home loan. So I bet they would like to have that come back up a little bit. More on the Fed probably next week as we get close to that event. Noah, let's get your take real quick. This is the last one on the commodities for now. What's your take on oil here? I know you said that you had mentioned it in the stock report as well.
I think that the pattern is bearish, but I agree with Gino. I think the Saudis are going to be turning the pumps off to control inventories. I think we're going to see a price rise, and I'm actually selling put options on the USO, looking to build in a posture on it. Technically, if it drops, I can short sell it to cover the drop, but I actually want to get a sign, so I'm selling at and near the money options, looking for assignment, getting paid, and then you have the ability to write covered calls, collar it, or sell covered calls, or buy protected puts if you need to protect it. But it's something I want to own because long term, it's got no place to go but up.
Interesting. Yeah, I'm still bearish, boys. I mean, I know that, this is what makes a market, and it's not long term because I understand exactly what you guys are saying, and I want everybody out there to think about this. You can have more than one opinion about a product. In fact, in my perspective, if you don't have the ability to know why something would go up or down, then you don't truly understand it yet. There's the old thing I tell people: if you can't make a case to buy it and sell it, you're probably not reading everything in the chart accurately. There's that old rose-colored glasses scenario. It's got a nice snapback rally down here. You're at extreme lows. If the dollar does have that kiss goodbye pattern, Noah, like you had identified, and it does come down, you would expect some inflation in commodities. It easily could rally back up. $50 on crude light. You break above $50 on crude light, all bets are off, to the downside. You have to respect that upside because of what we said earlier. Phrase of the day is trade what you see. Pop that in the chat again, guys. Trade what you see. We can sit and debate opinions. We can sit and debate news. We can sit and debate it all day long. We can sit and complain about Gino's Jerry Brown grass. But at the end of the day, if it breaks out, Gino, we got to respect it, right? Let's get into your option picks, Gino. Which one you want to talk about first, my friend?
Oh, I only have a couple to talk about, Tim. So if you bring up the option report in good old website known as tackletrading.com.
We love it.
The charts are linked to it. You guys, I hope you guys like that because it takes a long time to link these charts to there, just so you know. And so I want to make sure we use it here. So let's scroll down to the Bulls pick. I didn't have a lot of confidence.
I want to compliment you. I love the position size calculator that you built in there. Very cool.
You know what? I want to thank one of our students sent that to me, and they said we can use it. So thank you to that student. There we go. Oh, by the way, guys, that thing, that calculator, I put a note on there. Don't do the max contracts just because it says the max contracts is 15 or 3 or whatever. Always do less than the max, at least a contract or 2. Just because it's a gappy market, it's volatility, a lot of surprises, and it's better safe than sorry. So next, the first thing is SYI. SYY. This one did not trigger today. If you click on SYY right there, there we go. Did not trigger. It missed it by 3 cents. Okay, so nice gap up and everything. I still like the trigger on this one to buy calls. I only found a couple bullish trades. It took a long time to find those, and I didn't even want to put bullish trades out there to tell you the truth because I think we're in a kiss of death situation like Noah was showing. But this guy could break out and be very profitable. The next one's AAN. Just go ahead and click on AAN. It should bring up a chart there. Here we go. This guy did trigger right out of the gate today. And I got done doing my update, and I didn't have many adjustments. I had to go into a second update because it was actually profitable at the end of the market. We were up how much per contract? About 40 to 50 bucks, about 40, 45 bucks per contract. In this market, I said I'm taking some. There's a little double top that it hit today. If this breaks out, it's got room to go up. Target is about 41-ish based off Fibonacci. But you guys, this is great when you get a 17, 18% return in one day. Did anybody take profit on this one besides me?
AAN, anybody grab that one this morning?
Oh, I'm sorry. That was AAN. Yeah, that's right. AAN, not SYY. AAN, that's the one. Yep. That's the one. It's a double top right there. Oh, good. Now, it was only about 40 bucks, but you guys got to remember, 30, 40 bucks on a $2 entry. I think I paid $2.05. That's 17%. If you're getting 17% in one day in this market, that's better than the majority of the population out there, especially better than the majority of the population holding on to their 401ks and crossing their fingers.
Gino, I've always said this. If you can make 1% a week, you're a professional trader. So if you can make 17% in a day, you're dancing on your desk.
Yeah. So the nice thing about this, Tim, is it opened up right where the trigger sweet spot was. It closed at the high of the day. That candle you're looking at there, guys, that's picture perfect. That to me is just great on a day one of a trade. You know, if you have like 9 contracts, there's nothing wrong with taking off 8 of them and letting the last one ride and tightening up your stop. Because the stop's far away now, you know. If this breaks out, yeah, you can make more money. Next one, Tim, I just want to look at the 3 bears. None of them triggered. Because these all gapped up. They did not trigger the down point. I'm leaving my triggers there on the downside to buy puts, but none of them triggered on the bears. So we're done with the bulls. We're done with the bears. Real quickly, I want to make a note on PANW. Paul, Apple, Nancy. What's W? Whiskey. Okay, yeah, Tim's favorite. PANW. Again, that's not in the chart. It was there last week. It was last week in the credit spreads. Just a quick note, you guys, and I put it in there. They have earnings tomorrow, so I'm out. I'm out. You can they have earnings after the market tomorrow. So, so just so you know, I wouldn't want to be around there tomorrow. In a credit spread, if they have earnings after market, don't take it to 1 o'clock to get out. They'll widen the bid ask on you and really ding you. They'll make you pay extra to get out, probably more than you sold a month ago. They know you want out.
Here's a quick pro tip. I got to give everybody a quick tip here, guys. Watch this. If you don't know how to do this, pay very close attention if you're brand new. On a Thinkorswim chart, if you have not offset the time axis, you can't peek ahead to see when the earnings are. So your chart may look like this when you first log into Thinkorswim. What you have to do is come up and click on Style, and go down to Settings, Time Axis, and then add some bars to the right. I always do 50. You could do 10 or 30, whatever you're comfortable with, because then you can peek ahead, Gino, because if you accidentally hold through an earnings report, that pretty much is an indication you're a rookie, right? Which is okay when you're a rookie, but we don't want to make that mistake. That's something we can avoid.
Good tip, by the way. Good tip. Yeah, look ahead. That's why I like Thinkorswim. You could see ahead the earnings and dividends. That's a great tip. Just so you know, try to get out early, at least good 24 hours before the earnings report on a credit spread because they widen the bid ask. And then let's go back to the credits. We got filled on Amazon and CMG on the bear calls. Unfortunately, we got good credits because they went up today. And what's nice about this is on bear call spreads, Tim, if these go up, the volatility drops, you still make money. Just you don't want them to go in the money. Keep your eyes on those. Keep your eyes on those bear calls. Last one, debits.
Now, hold on one second. I'm going to slow you down because I found this one to be really fascinating. I want everybody out there who's new to options, I want you to type in either the word rookie or me or something if you're brand new to this stuff. How many of you out there are pretty new to this stuff? It's okay. Are you noob, brand new, rookie? I tell people they give you a year in the big leagues to be a rookie. It's okay if you're a rookie right now. Not a big deal. We can learn. Okay, but one thing that Gino did here that I think is really important, and Gino, I want you to just touch on it for a second. You said $1 limit credit or better. Okay, now when I looked at this in the options report today, I immediately went into look at the credit, and the September 565 580, and that was, I believe, for September 4s. Open up the September 4s. Find a 565, 580. I sold, and CMG was even worse, by the way, but I want to get your take on this. And I bought, and it said 83 or 80 or 85 or something like that. Talk to the team out there as why we were asking for a little bit more money, even though the price in the order form was only 80.
Yeah, Tim, good point. When the bid ask is that wide, you can get a better feel on these spreads. It's going to move around a lot. And especially after hours when you're looking at that, it's really wide. There's a certain percent I want to make on a credit. And, you can always adjust it. I'll go for an even dollar on something like this and let it sit there because that will move around during the day when the market's open. And, a dollar's good. I'm willing to go 90. I'll walk it down. I'll go $1. Then I'll change it to 95 cents, and then I'll change it to 90. It's a little walking order. You could change it. But you don't always have to go the mid. It's just what is in the middle of the bid ask. You might get better. If you go market, you're going to get natural, which is 40 cents. They're going to nail you. But yeah, there's a wide bid ask. There's 2 legs in that option, so it's moving around. They both have wide bid ask spreads in there.
Very, very good. All right, you got one more, and then we're going to go into our favorite segment.
Anthem is a debit condor. We just got filled on it. It's actually making money on the... What side is it making money on? The call side. It's making money on the call side. This guy bit me on the credit spread last week. I'm going to make it back with the debit spread this week. And there wasn't many good debit spreads out there because volatility is high. And not enough to make profit. I like to see at least $100 before I take any profit off on these things. And that's about it, Tim. That's all I got for the options report, guys. Any questions?
No, I love it. We're going to get right into rapid fire. Time to light them up, guys. We're going to take the first 15 or 20, and we're going to go with those. Light up your rapid fire symbols, and we're going to get started. Cannot promise we can get to everything. We'll get to what we can. Now, by the way, please, 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 stick around to the end today. I've got a couple of announcements regarding some team projects that I want to work on. So I want you to stay till the very end of class, okay? I've got a few things that I want to bring up with the team. All right, let's see here. Let's start with Win Casinos. Pearl, I think Pearl was in there first. I love it. All right. Let me get all these copied. You know, Gino, that whole copy-paste thing, that still gets me sometimes. You know, it's difficult running these computers. I'll tell you what. Small town kid from the country, I'll tell you, they stuck a computer in front of me. I didn't know what to do. All right, so we are going to start with Win Casinos. Steve Wynn, one of my favorite guys to listen to on a conference call. And Gino, why not you start first, man? Win Casino.
Yeah, that's bearish retracement like the rest of the stocks in the market. And I'd wait. I wouldn't do anything on this. I used to do a lot of credit spreads on this. It's great for credit spreads when volatility's pretty high. But yeah, I'd wait for it to retrace up to the 20-day moving average.
Clear downtrend there. Absolutely. Thank you, Pearl, for the pick. TSLA, Noah, let's bring you in here.
Tesla. Technically speaking, you got a big spike down there, some pretty decent volume on the support, but not a lot of volume on the run up. I kind of look at it kiss goodbye-ish like the market. That's my general call. Trend zone, kiss goodbye, bearish.
Interesting. Love it. All right, Netflix, Solon, I'll take this one. Heard a really good TED Talk on Netflix's business practices recently. They've got some pretty cool corporate culture stuff going on there. If you're a podcast listener, go to the TED Talk hours and you'll find one on Netflix recently. Definitely breaking down Solon. I mean, the one thing that you have to ask yourself is market up huge, Netflix down huge. Where's that volatility coming from? You've got a head and shoulders, actually pretty close to confirmed. Head here, or shoulder here, head here, another shoulder, showing a lot of weakness. Look out for support. You know, you're going to get a support test here soon. There's still $5 to $7 before that test even comes in. I've got to call that a head and shoulders pattern like I see it. Let's go to TBT from Gino. TBT.
Is that the bonds?
Yeah. Ultra short Lehman 20-year Treasury note.
Yeah. Can you zoom in on that? Yeah, I can't see the movement. There we go. Yeah, it's got a lot of overhead resistance like the market. This is neutral until we get into our meeting next week. I wouldn't even touch this until after the meeting.
Okay, want to know his watch list stocks here. Apple Computer, Noah. Give us a read.
All right, let's see here. Consolidation. You've got a general bear flag. They've got a new product coming out, so that's probably something to watch, one of those pieces of news. But a lot of volume came in on the support, kind of dies off, peters out. That's a bear pennant. It can go either way. Whichever way it breaks is the way we roll. Watch for the new product release.
Got it. Paul Butters bringing in Freeport McMoran. Going to be right down my lane here. Definitely a downtrend. You've got to respect a stock that just bounced 7% here today. They pay a dividend, probably a pretty decent covered call as well if you believe in the stability. It's not often you get a $10 stock with penny options that trade weeklies that you can get a lot of action on. You know, interesting candidate here, Paul. I would watch if you're bullish. I would watch for a breakout here at 12. You know, if you're bearish, probably a trigger down here about 9.5. Generally, still a downtrend. It's got some concern there. Gino, one of your favorite things to do: strap on a GoPro and go out there and explore the world. Let's bring in GoPro here.
Okay, GoPro. You know, that's almost my name scrambled right there. GPro. Okay. Yeah, that's definitely bearish. Wait for a retracement there. Yeah, that's like the rest of the stocks out there. It's definitely bearish, and they better do something to save this guy. That's death territory. That's dropped quite a bit. Nice retracement. I'll do puts on this after.
Absolutely waiting for a retracement into the bear zone here. Caterpillar for you, Noah, one of the biggest companies in the world. I'm sure you played with trucks when you were a kid, right? Caterpillar,
Just a little bit.
All kinds of stuff. Yeah.
Oh yeah, in the sandbox all the time. I'm bearish on Caterpillar for a couple of reasons. One, seasonally, industrials are getting smoked. Definitely a bearish kiss goodbye type setup. Bear retracement, dollar strengthening, and I'd say that's going to hurt exports coupled with just cooling weather. So that's one of the seasonal things you want to look at for that one. I'm bearish on that.
Absolutely. WWAV. This one's mine. White Wave Foods Company. Kind of looks like the overall consumer staples sector at large. Don't see anything discernible outside of that. Old Kiss Goodbye right in here. Kind of an upward move today. Relative weakness. Market was up a lot more than 1.9%, and the stock didn't follow through. So I'd be looking for a breakdown from here, or one way or the other. Probably that pennant pattern that Noah said is so prevalent in the market right now. Euro, Australian dollar from Richard. Gino, now you got to talk about two crazy currencies right now with the Euro and the Aussie. What do you see?
I see a nice breakout above the double, triple topish area. That's a bullish triangle right there. Euro Aussie right there. Above the last doji 3 days back would be my trigger, just above that doji to go long the Euro Aussie right there. And if you like trading that currency pair.
Absolutely. Two of the more interesting currencies. Yeah, I mean, you're dealing with the Euro with the ECB stuff. You're dealing with the Aussie and the Royal Bank of Australia and all their craziness last year, but also weakness in commodities. I like that. Of course, it would be Richard, one of our currency boys out there. Richard's getting a little experience in the currency markets. I like it. All right, and Noah, TLT, I think this is the Treasury ETF, kind of the same thing we were looking at earlier.
You're seeing kind of general flight to bonds. Bonds have been up, market's been down. We've got a breakout and retracement. I'd be cautiously bullish on confirmation. Not a real fan of those gapping, disorder type scenarios, but looks like a kiss hello kind of scenario. Wait for confirmation.
Let me see. We don't got time for all of them. I got to pick some out here. We are going to look at Baba, Martin's pick. I'm going to take Baba myself. Alibaba, bearish. I mean, Chinese weakness, honestly, even with the Shanghai index up, you see Baba also selling. The large cap Chinese stocks, I'm still very concerned about the Chinese market. I know there's a lot of news coming out of Asia right now that they're trying to put some support from the government. I simply just do not trust that yet. You got to trade the chart, but it's bearish, right?
No one wanted to.
Yeah, Gino. Yeah, see Gino next. We're going to do two more, and then we're done. And let's see, let me pull Alcoa, one of the biggest Dow 30 companies in the world. What do you think, Gino?
Yeah, it's also very cheap. So this is one you definitely don't do options on unless you're doing like a covered call. But yeah, it's you either short or go long when they're under $20. This one here, I'm in neutral territory on this one, Tim. That's neutral. Again, covered call type play, if anything. It's not a big mover.
Mm-hmm. And last but not least, EOG. Noah, last chart.
Looks like a possible inverted head and shoulders. Overall, trend is still down, but it's going to be pressuring. If it breaks resistance, you're a buyer. If it breaks support and that consolidation, you're going to be a seller. I don't have a fundamental opinion of it, but it's overall, I can see it's going to break whichever way the market goes. So double check the sector.
I love it. Oh, we're good. I want to make an announcement. We're about done. We're right at top of the hour. Real quick, guys, I need anybody who wants to participate in this, even if you just want to give feedback. And in the clubhouse, there is a thread. And if you have requests for how you want it to go or what you'd love to see in there, there is a thread that I created for people who want to participate in a collaborative effort to make a trading journal. I've got a bunch of Excel files. You guys are a bunch of very talented people. I've already had 5 or 6 volunteers. I'm going to make some decisions tonight on how we're going to move that project forward. If you do want to do it, it's called Trading Journal Collaborative Project. If you want to work with some of your fellow team members to kind of do something awesome. So outside of that, this has been the Coach's Show from TackleTrading.com. This is Coach T. Noah, Gino, last words?
No, just play it safe. This is a volatile market. The bear, he's awake, and you can wake up to a big move down of 2.5%. Like it's no big deal. We're doing that right now. It's just one day up, guys. Don't get excited yet. And play it safe. Keep your position sizes small, but definitely paper trade. Don't be afraid to trade if you're just paper trade at least, and learn from this volatility because it's actually pretty fun.
All right, we're out.
You've been listening to the Trading Justice Podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.